Hi all, welcome back to Foreign Currencies with Scott. Today is Wednesday, December 3rd, so we're checking in midweek on our $1,000 challenge. If you're new to the channel, our $1,000 challenge is by taking $2,000 on July 1, we're trying to turn that into $3,000 by next July 1, making 50% on our investment in a single year. So 50% in a year is great by anyone's measure, and that is what we're shooting for. So we're seeing how it's going. We started on July 1. It's December 3rd now, and this video is just to check in on the first 3 days this week. So for the first 3 days this week, of which you'll see 3 clips, we had 2 non-trading days and 1 trading day, which was today. Okay. Unfortunately, although we had a textbook entry for today, the market had other things in mind and went the opposite direction on us. So today was a loser, but we still have 2 more potential days to trade in the week, Thursday and Friday. And we will be online to see what we can do those 2 days. And then we'll be back to talk to you about it on Sunday evening. Until then, good trading, everyone. All right, so we're going to take a look at December 1st, Monday. So the vertical bar near the left of your screen is the close on Friday in New York, and the middle horizontal line, 132.34.1, is the price of GBP USD at that time. And then the top horizontal line is 30 pips above that, and the bottom horizontal line is 30 pips below that. You see that just above the bottom horizontal line, there's another horizontal line, and that is the current price. So we're just going to try to ignore that for the moment as we're looking back in history here. Now, if we expand this chart so that we can see each hour of the day, we'll see that as Sunday evening started and the market was open in other countries, then we finally came over here to Monday, December 1st. And then at 3 a.m. in the middle of your screen now, at the bottom it says 3 a.m. That's when London opened. And you can see that at that time, and I'll just go ahead and highlight this. You can see that at that time, when 3 a.m. opened, it was at 132.206. So not 30 pips away from the New York close. So no real trade here in our primary method. And if we look just a little bit further, about 3:30, 3:45, you can see there's this one red candle with a long wick below it indicating a low, and the pair almost touches that horizontal line, which is 30 pips below, and then goes right back up and touches the New York close price. So that looks really good. However, we only see that in hindsight. What we have to know is when that 3:45 or whatever time it was candle, let's just highlight it and see what it was. So it was 3:35 and the lowest was 132.054, so still a pip and a half away from hitting that. But when it hit that, we really had no idea if it was going to go up or down from there. It would literally be a 50-50 chance. Now, I know we've said that we will win 50% of the time and lose 50% of the time, and this is a trade we could have entered, and we may have done okay here. It would have taken a little longer than you might be thinking, because it didn't go all the way down to the bottom horizontal line. Just touching the middle line would not have given us our 30 pips. So we would have had to have waited a couple more hours. But this was not a perfect trade to enter, though it is one we could have entered and would have profited. But according to our method, we should not have, and therefore we did not. So we will continue to look at these trades and really evaluate if we did enter, why we entered, and if we did not enter, why we did not. So the reason why we did not here is because we never really breached the 30 pips away. And by the time we finally well, we never did actually all day long. So I can't even say by the time we finally did, this happened, because we never actually reached it. But if we considered that 335 the low for the day, and then 2 pips after that, you see the green candle, we could have gotten in there, but again, not really getting 30 pips away. It does not meet our primary method, so we did not trade here. All right, that's it for Monday, December 1st. All right, we're going to take a look at Tuesday, December 2nd. So you can see the vertical bar on the left-hand side of the screen is the close on Monday. And then what we're going to do is expand the chart out so that we can see 3 a.m. And we can see pretty clearly here in the middle of our screen that at 3 a.m. the price action was still very much in the middle. So right now the current price is up above the New York close. You can see the 30 pips above line near the top of the screen, the 30 pips below line near the bottom of the screen. So we're just looking at this 132, 142 line. And we can see that at 3 a.m. we were pretty much on it. So there was not going to be a trade position to be enterable with our primary method today. Now, I do want to look at the price action though after London opened, which is rather interesting. So as you can see, before 6 a.m., the price action went down and touched the 30 pips away lower. And then after that, moved back up again after 6 a.m. and almost, but not quite touched that New York close price even once. Didn't touch it. Turned around, went back down under the 30 pips away at noon, and then turned around again and went up and hovered around the New York close between 1500 and 1800 today. So our 1700 close for tonight is going to be somewhere in between there. But the point of telling you all this is that it is bouncing back and forth. Those 30 pips away values do have meaning, because you can see here at 5 a.m. we were still hovering at that New York close price. Before 6 a.m. we had gone 30 pips low. Then you come back to between 9 and 10 and we bump it once, twice, 3 times. Well, twice, and then we go down, touch the bottom. So these price lines do hold a lot of uh, stickiness. So the price action will go towards them quite often, even if it's not in the timing that we want. Now, we have had some discussions in the past about could I enter later, as we have entered later, and we do see that at around, we'll call it, yeah, maybe 5:15, 5:20 here, we did go below, okay, and it did eventually go back to the New York close. That is a 30 pip difference. However, would we have made money? Would we have won if we'd entered this trade? So let's look at this. Now, we only know in hindsight that that was the bottom and that we went back up. But if we were just following a rule of getting below 30 pips, and then since we're below, we're looking for a green candle, we would have gotten the green candle there right at 5:30. So we would have entered here at the very next time period of the open. So we would have gone in at 131 and 90.3 pips. So 90.3 is where we would have entered. So for a 30 pip gain, we would have been looking at 20, 90, then 0, 10, and 20. So we would have needed to get up to 20 pips in the next penny range. And you can see that we just have never quite made it there. This is 10 here. And finally at 9:15, still, between 10 and 20, still between 10 and 20, still hasn't quite made it up there. So the point of this is that now what's happening is, because we were not able at 6 a.m. to get in 30 pips away, see, we got in here. So we're having a hard time getting 30 pips because now we have to go that much more over the New York close price and not just touch the New York close price. So that never really happened as we track over here. In fact, we didn't even get to the New York close. Now you can see what happens is it's gone down below. Now, if we had entered at this time, which is right here, what would our stop loss have been? It would have been 70.3 pips. So let's see if we ever get down to that 70 line. So we would have entered just after 5:30 a.m. And so nothing 30 points higher and nothing 20 points lower. Looks like maybe as the evening has gone on here, we might have finally made it. So it looks like we would have made it, but boy, that would have been asking us to stay in until past 20:30 Eastern time, which is quite late, and we're usually out before New York closes. So would have finally made it, but would have had to stay in a long time. But as you can see from this chart here, uh, never really would have challenged a stop loss, but it would have been a long, long day watching this. So again, that would have been an option. The main reason not to do this, if we can't get in until this period right here, is that we have to go that many pips above New York close, and New York close is acting as resistance. See, when we go up here, we bump up against it, we bump up against it, we bump up against it, we make another run here and we bump up against it again, finally, but it took hours and hours. It took over 12 hours to get there, which is just too long for the type of trading we're trying to do. So no trade again for us on Tuesday, December 2nd. We will set up for tomorrow and see you again then. All right, we're going to look at Wednesday, December 3rd. You can see we have our New York close set up on the vertical bar on the left. And we started to drift away from that up a little bit as time went on. And then we crossed over from Tuesday into Wednesday, finally breached. And then we'll see here at 3 a.m., we were just over this line that is 30 pips above the New York close. So once we get a red candle after 3 o'clock, we would enter, since we're now down up above it. So we would have entered, and we did enter right there at the open of this. So 132.42.4. So we opened to go down. And so this is also a good position to be in. I'm trying to adjust this so we can get a better feel for the bumps in the road here. There we go. So what you'll see here is that we did breach the 30 pips away between 1 and 1:30, dipped below briefly, and then at 2 a.m. we made a good move above that, up another 10 pips. If you look at the far right, you'll see 132.40, and then just up above that 132.50, so 10 pips. So more than 10 pips above the 30 pip away. Now, the reason why this is good that it's above and that it's not more than 20 pips is because at 3 a.m., when we enter to go down, so we would have entered at the opening of this, oops, wrong one, 305 candle. So we would have opened there at 42.4. Remember, our stop loss is going to be above us now, and the stop loss would be 20 pips above. So we had gone higher in the morning before our entry, but we could retest that and still not be stopped out. So that's why it's a good setup. Now, having done everything right and a good setup, you'll see that for a couple of moments there, up to 3:30, we did go down, but then the pair turned around and just went up. And so we were stopped out for a loss, and for the day, it has continued to simply just go up. So that is what happens sometimes. Our primary method is based on a pair revisiting the New York close, and sometimes it just doesn't do that. So today, you can see from last night, it moved away from the close in an upward direction, and it never even got close to going back to the New York close before moving higher. It just simply moved higher. So we took a loss today.